we know the Terminator movie and how it kind of brought again around Armageddon, but the idea is, could this bring financial Armageddon? What if all these algorithms, what if there's a bunch out there and all of a sudden they start learning things and all of a sudden the markets start to drop and they're learning, they say, oh, well, this looks like a crash. Let's all dump at the same time. Does it then create a potential for a stock market crash? And I think that's where we have to be very, very careful. There needs to be safeguards put in place.
Everyone and their mom heard about ChatGPT in the last few weeks. This AI technology took the internet by storm and became viral quickly for its use cases. People are now using AI for design, scripts like this, and even trading. Some even claim to build trading robots that perform even better than humans. So, we want to share with you this interview where Gareth Soloway, a master trader with 20+ years of experience, goes through why this technology from OpenAI can be extremely dangerous for traders. So please pay close attention until the end. Not only we're talking about ChatGPT in this video, but also how Gareth could predict the 20,000 Bitcoin prices and what's coming in the future.
I think that that is a possibility, but I think that, again, the institutions already have that edge, a lot of the algorithms. In fact, I would almost guarantee that a lot of the hedge funds, the biggest hedge funds and institutions, are already trying to incorporate it to see if it can work. So I do think that's a concern. I think that's something the regulators are going to have to look at. Like, do you kind of have a monopoly in terms of institutional investors using some technology like this that the retail crowd does not have at their disposal? And is that, or should it be legal? And I would dare say that, again, it's all about keeping an even playing field for all investors. And obviously you have institutions that they have information slightly quicker than the general public because we do not tune in quite as much as they do. But overall, they can still buy and they sell. Now, if you get an algorithm that's an AI and can actually start gaming things, then that could be problematic. So it's, I mean, that's what AI is supposed to do, right? It's supposed to learn and adapt. And I think the biggest issue there is, right, I mean, we know the Terminator movie and how it kind of brought again around Armageddon, but the idea is, could this bring financial Armageddon? What if all these algorithms, what if there's a bunch out there and all of a sudden they start learning things and all of a sudden the markets start to drop and they're learning, they say, oh, well, this looks like a crash. Let's all dump at the same time. Does it then create a potential for a stock market crash? And I think that's where we have to be very, very careful. There needs to be safeguards put in place. There needs to be rules. And this is the new frontier. I mean, whether it's, Neuralink, right? Something that an Elon Musk is working on that could make someone much more advanced than they normally would be, or algorithms that can trade and really, squash the little investor. It's definitely something the regulators need to be on top of right away.
What if AI starts learning, evolving, and manipulating the markets?
So I'm a big fan of acting like a robot. If a trader or an investor can be robotic, right? Then they're going to have an advantage. But the key is this, is that as a trader, the one time I get into mistakes, and I've made plenty of mistakes, and I want people to understand this, is that, by no means did I, start out a great trader. I had to go through years of learning, losing money, making bad decisions. And if I look back at those decisions, there were key things that I did wrong, and they generally all stemmed from me getting emotional. It was either something was running up and I felt like I was missing out. I had that FOMO, so I jumped in. And of course, like everyone else, you jump in, generally it's going to be towards the all-time highs or the high pivot of that before it sells off. And the same thing on the downside. When something's crashing, instead of looking at the chart and being robotic and saying, okay, this is support, this is where it should hold, I was panicking and I was dumping at the absolute wrong time. So believe it or not, you actually want to be more robotic. You need to control your emotions as a trader and look to the logical chart statistics, the probabilities.
But could AI be used to help to trade instead of replacing human traders?
You get into some interesting things where like I'd be intrigued by some sort of method where I could be, kind of just talk to an AI, right? If I could talk and say, hey, buy 1,000 shares of Microsoft, or do this or do that. And if I had trust that that would actually do it, or kind of direction, as long as it was under my control, I think that would be very beneficial. And then also AI potentially, mapping out potential moves in a market, right? So show me the 5 most probable moves of Tesla over the next 1 week period, and it'll kind of gauge those things. And so there's a reason. I mean, there's a way it could bring really valuable information to me as a trader. It's just once you get into saying, okay, let's let this bot go trade on its own and learn and do whatever it wants to do, that gets a little scarier when you're dealing with a financial system of hundreds of trillions of dollars. I mean,
Right.
again, we all know what happened during the Great Recession. You kind of throw this to the AIs, who's to say where it's going to end up? We look at volume. And the reason I look at volume is that if something does not have a lot of volume, then it adds additional risk to your trade. So as a trader, your goal is to minimize every risk possible. And by the way, you're not going to be able to get rid of all risk. Investing is risky, but the point is you don't want to take dumb risk. And when there's very little volume, it means that one seller, let's say I'm buying XYZ, it only trades 100,000 shares a day, and I'm picking up 10, 20,000 shares. What if one seller had a bad day and this person that owned it was like, all right, I'm going to dump my 100,000 shares. That 100,000 would manipulate and drop that price significantly out of my control. So the first thing I look at is volume, making sure it's extremely liquid. No individual should have power to change the chart pattern that I'm looking to trade. Another key principle would be, is there action here? If there's no action, if a stock is trading sideways and not moving, why am I going to get involved in that? My goal is to be in and out quickly as a day trader, even as a swing trader. I want to find a level. I want to buy that level as the stock is collapsing into it, and then watch for that snapback bounce off of that technical support. So again, as a trader, it's a very different mindset than a long-term investor. Long-term investors are focused on fundamentals. Fundamentals are key. You want to go long, so stock makes money, they pay a dividend. Fantastic. Over 10, 20 years, you'll do fine. For me, I couldn't care about dividends because I'm in and out of stocks so quickly. And same thing with cryptocurrency, where it's just getting in, getting out, making a few $1,000, moving on to the next one, doing a rinse and repeat.
Why did Gareth Soloway call Bitcoin 20,000 when no one believed it? Could an AI do this too?
So the thought process is this. And one of the things, and we talked about this at the beginning, is I'm always analyzing the mental psychology of the makeup of investors. And when we were talking in Dubai, when I was there with you and we were doing the interview, one of the things that I noted was that the insanity around Bitcoin. In addition, another factor was I looked back at 2017's high, and one of the interesting things about 2017's high was that the high was made and it coexisted with the launch of the futures on Bitcoin. And sure enough, in 2021 in October, when we were talking, they were just launching the futures ETF on Bitcoin. And there was so much hype around this. It was going to change. All the average investors were going to be able to jump on board, even if they didn't have crypto accounts, to be able to trade the ETF. And obviously that added to the hype. So hype was number one. I was noticing, and it made me very uncomfortable. The same sort of hype that I saw in the late 90s, early 2000s when the dot-com bubble was going to burst. The same hype we saw in housing in 2007 before it collapsed. So when you're through enough of these bubble and busts, you start to recognize the emotional attachment and exuberance, irrational exuberance, to use Greenspan's term, of what's going on, and that is a warning sign in and of itself. So that's the first thing. I was on alert. The second thing is, if we go to this chart, notice how we made new highs from the early 2021 high, but there's something called the confirmation signal. This is something I teach in my course, the Winning Trader series. But look at how this high here, all right, notice how you closed above the high and then you reversed. And then you closed above the high here again. It tried to break out again, and you never got a higher close. So the confirmation signal, and I'm just going to give you guys a crash course in this. What basically you need to do, you have to have a close above the key pivot, which was this trend line, which you saw here and here, and then you need a secondary close at a higher high. Pivot, higher high here. Notice how that never happened over here. And to me, that was telling me institutions were dumping into it. If you think about how much irrational exuberance and buying there was from the retail crowd at these highs, this Bitcoin chart should have blown through that level if the institutions were not dumping into it. The long story short, without confirmation, it was not a true breakout. And in fact, it turned out to be a classic M pattern top, right? Double top, M pattern top, which again, in technical analysis, when you learn it, you start to pay very close attention to those type of pattern tops, especially when you have negative divergences. And let me just speak about this real quick. What's the negative divergence? The negative divergence was that in April of 2021, when you were at 65,000, you had hype. When you were at the same level in price, you had basically double or triple the hype. So what I'm saying is the hype was higher, but the price was not matching that. It was a negative divergence in price. And again, you can even look at the RSI and you can see this negative divergence building as well. So these are key things that, again, it doesn't come overnight, but I always tell people 10 minutes a day of learning how to read charts. In 1 year, you will blow your mind at how good you have become. I look back at my younger self and I'm like, dude, what the heck was I thinking back then? Why did I even think I should trade back then before I learned this stuff? If you look at past bear markets that finally went bullish, the first 20, 30, 40% of a move in a stock or in a market, investors were extremely hesitant. They didn't believe it because they had been hammered so badly. That's not happening with Bitcoin, and that does concern me.
And this is his reasoning recorded a few days ago, why Bitcoin is still going lower this year.
If you zoom out on the chart, and we can see my chart here, that this, again, it's a nice bounce, but you're still in a downtrend. You're still in an overall downtrend. And I think people have to be aware of that. In addition, you have to also remember that the Fed, this is the first bear cycle the Fed is not printing money. So the question I would say is, well, what does that mean for this cycle? Is it an elongated bear market because of that? And so these are the things that you want to pay attention to. Now, if you look here as well, in 2020 and 2018, we kind of had this same sort of almost rounded bottom like we did back we just came out of, and you did have this run up, but then look at what happened to price. It came back and basically retested that $3,500 level, and I think that again is a good guidance level for what we're going to see here, and that would just be a retest. So you're looking at going back to 16,000 or so. All right, on the other side of the coin, the negative here and why I think it could go lower is that if you don't have money being printed and the stock market does decline by as much as 25% in 2023, like I'm predicting, where is Bitcoin? Where are other asset prices that are risk on assets like Bitcoin? And I would dare say that without the Fed's printing of money, Bitcoin is still headed towards 12 to 13,000 and maybe as low as 9,000.
So what do you think? Can AI like ChatGPT be used for our trading needs? Or even trade entirely for us in the future? Let us know your thoughts in the comments below. And if you want to see more content like this, please leave a like and subscribe. Thanks.